Welcome back and thank you for staying with us. Now, South Africa's economic growth outlook for 2024 at 1% year-on-year is stronger than last year's outcome. 2024 is expected to see the start of an interest rate cutting cycle, lower inflation on average and improvements to infrastructure. But there are growing concerns, of course, about the country's ballooning debt. So what impact is this likely to have on overall growth? Annabelle Bishop, Investec Chief Economist, joins us now live for more. Annabelle, thank you for joining us here on eNCA. Just firstly, I mean, we are day 4 into the new year. How or what are you attributing this finding to, that our economy is going to see growth this year?
Yes, hi. So last year, we likely are going to see an outcome of 0.5% for the economy. And of course, that really means that was a very weak growth year for South Africa. And this year, we're expecting about 1%. So that would be double the outcome. And of course, you know, there are expectations that we're going to move into an interest rate cutting cycle. And of course, the United States do that as well. So, you know, we are seeing inflation dropping to 4.5%. By July this year. And indeed, the inflation rate could dip below 4.5%, even reaching close to 3.5% by October and finishing the year closer to 4%. So that would really imply that an average of 4.5% for CPI inflation for 2024 meets the inflation target midpoint and would encourage the South African Reserve Bank to cut interest rates, which, of course, as you know, is helpful for household consumption expenditure and for economic growth overall.
Well, of course, every South African consumer would welcome what you're saying, especially when it comes to the Reserve Bank and the interest rates, etc. But what do you attribute this to, all of your projections in the few months' time, etc.?